So what is the best pick for 2022? Cryptos or the stock market? Well, let's take a look. I'm Rachel Jones and this is Kalkine Media. Well, there's no single valid argument here. Returns in both stocks and cryptocurrencies can be overwhelming. 2020 bloodbath in the global stock market in the wake of the pandemic. Tesla's stock soared by over 700%. The sell-off of stocks was limited and share markets rebounded in the second half of 2020. But Tesla's rise was literally incomparable. In 2021, it was the term of the meme stocks. Humble GameStop Corp was trading at under $20 at the beginning of January 2021, but by month's end, the shares breached $300. They fell sharply and then rose again, all in a matter of a few weeks. The average annual return of the world's most closely watched index, the S&P 500, was up 18% in 2020. This year, the returns have followed a similar trend. The index is the favorite of ace investor Warren Buffett. In cryptocurrencies, the aberrations were a normal happening in 2021. One crypto asset, Axie Infinity, was up more than 20,000% in just a few weeks. A major cryptocurrency, Solana, also gave a similar kind of return to its backers. Even the second largest crypto, Ether, which is expected to be less volatile, grew multifold. And then there were some that literally fell to zero. Squid Game crypto fell from almost $2,800 to zero in a matter of a few minutes. This shows the underlying hyper-volatility in cryptos. Stocks too are volatile, but such a sharp rise and fall is usually a one-off incident. Bitcoin, the largest crypto by market cap, is expected to be less volatile like the S&P 500 index, but it too can surge or fall in double digits in a single trading day. Some developments make cryptos very interesting. The S&P Dow Jones created Bitcoin and Ether indices in 2021 to track the movement in their prices. This is no mean feat, and this could be the beginning of a future where stocks will have a neck-and-neck competition with crypto assets. Despite all the criticism around their volatility, major economies have refused to ban trade in cryptos. In China, crypto trading was outlawed, but no other big economy followed the lead. In fact, companies like MicroStrategy bought more Bitcoin in 2021. And in the US and Canada, Bitcoin and Ether ETFs emerged as a big rival to conventional funds. One key factor that could prompt investors to look at cryptos instead of stocks is inflation. Cryptos, when bought and sold at opportune times, can be a better hedge against inflation as compared with stocks. But crypto investments are also prone to heavy losses. Cryptos are volatile, and so are listed shares of even the biggest companies, but the former trade more on sentiments and less on fundamentals. All crypto projects are in their infancy, and there's no certainty that the decentralized ledger technology will truly become mainstream one day. Stocks have fundamentals like revenue, market share, and a fairly predictable future growth. Now, if you like the information in this video, you can like, share and comment on it, and you can subscribe to our YouTube channel. You can also press the bell icon to get notifications for our latest videos. I'm Rachel, signing off for Kalkine Media.